portfolio as per the new Samvat. So let's bring on board my guests for today. We have Kunal Bothra as well as Sharmila Joshi joining.
India's most experienced market anchor. You don't just
Joining us on Buy Now, Sell Now. And let's talk about stocks then in particular. And Sharmila, let me come first to you. Which are those two top stocks that you have that you believe that every investor must have in their portfolio, given the fact that we are entering a new Samvat?
I wouldn't exactly phrase it like that. I hope there are many more stocks that investors have in their portfolio. But two stocks that they could look to add at this price and which I like are IDFC First Bank and Tata Consumer. So talking of IDFC First Bank, the numbers have been very encouraging, the quarter-one numbers. What was especially encouraging in the quarter-one numbers was, let's not forget, they had a lot of legacy issues. So they seem to be an indication that they're coming out of that. The credit growth has been strong. Again, this credit growth being strong is important for IDFC First Bank in the sense that that book is largely, smaller corporates, SMEs, etc. Which is also again stepping away from some of the legacy issues that they have. So overall, they seem on track to get to a 2% return on assets, as the management has been talking of. So I would have a target of closer to 65. So basically, it's a recovery story, and it is now being supported by good numbers. So you need to keep that in mind and hold the stock. And I do expect that around that 60-65 level, you may see some sort of a sell-off, but if you're long-term enough and the numbers are justified even at that point in time, then please continue to hold. Another story that I like at this point in time is Tata Consumer. What we are seeing is that all their various businesses, whether it is the Indian beverages, whether the Indian food, the international beverages, everything seems to be doing well, but especially the Indian food business is what I like, and I think that's going to be a good growth motivator for Tata Consumer as a stock. I think even in terms of numbers, the revenue growth that you saw there was very satisfying. Starbucks is another play that I like, and I think as we see full force to normalcy, we will see them opening more stores, and we will see them turning profitable on some of the other stores that they've opened. So Tata Consumers, again, a long-term buy with a target of 900.
Thank you so much, Sharmila. This is Adira joining in, and very good morning, Kunal. What about you? What two stocks do you suggest on this lucky week with Diwali almost approaching?
Good morning, everyone. So the two buy calls which I would suggest, one would be more from a portfolio as well as a longer-term play. That's Tata Motors. I've been very bullish on the stock since the last couple of years and would maintain that bullish stance. In fact, the best part is that the stock is now available closer to its major support points, which is the sub 400 levels for Tata Motors. So that would be a very good trigger to buy the stock. Risk reward also very attractive. My longer term targets would be 450 and even beyond that as well, depends on the kind of time frame one is looking out for. 370 approximately could be a stop loss for Tata Motors. Axis Bank has somehow emerged to be a new breakout candidate in the last 12 months or 13 months of consolidation. Even though we've not typically talking much about the stock, but then the outperformance coming back is coming back for Axis Bank. So that remains to be the second pick. Targets of 925, stop loss at 745.
All right, so those are the top picks coming your way from both of our experts. For Sharmila, it is IDFC First Bank and Tata Consumer. And for Kunal, it is Tata Motors as well as Axis Bank. So those are your top picks, at least for today. Through the course of the week, we will be sharing with you some more names that you can fine-tune your portfolio with. But for now, we'll slip into a break on this edition of Buy Now, Sell Now. But stay tuned more on the other side, so don't go anywhere.
ask the right questions. You make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
If the normalization in the world will happen, demand which in a sense got destroyed will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
The long haul FII who looks at India as still a promised land for an consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now.
Hello and welcome. You're watching Markets at Noon. Midway through the trading day, we help you catch all the trading action.
And get the bigger picture of the equity markets.
We help you screen through all the clutter and get you research insights.
Master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch Markets at Noon every trading day only on ET Now.
Rakesh Junwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple
But
of
I
years
always
ago.
used to, I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी नहीं.
Once a trader, always a trader. Rakesh Junwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes. You don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember I want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
In individual sectors.
What's the sense that you're getting on volume growth? Just clarify this entire case. What is it going to mean for the business? What else are you looking at?
This is clearly one of the biggest deals.
Here at ET Now, I've been getting you bit by bit.
The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you'll be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You should remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%. But we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline,
Welcome back. You're watching Buy Now, Sell Now on ET Now. And yes, the markets are volatile trading sessions day after day. A lot of dependence on global factors as well. So let's ask Sharmila, what should retail investors do to protect their wealth in such a volatile environment? Sharmila?
A very difficult question. Because, honestly, the way markets have been, what you're really seeing is more or less in a range. So if I were to look back at anything that I bought a month back, it may have gone down, it may have gone up, but today it's back at the same price. So it's a very difficult market to be in the sense you're not getting the direction. So I think what we really need to keep our faith in is the fact that Indian macros seem to be good because, whenever RBI meets or any other data that we read in the press, that data seems to be sort of going along expected lines. So my approach is really now to do an SIP in equity. I have a list of stocks that I like, and every time I see market go say below 17,000 Nifty or slightly lower, then I start buying. And then if it goes anything about above 17,500, 600, then I sort of step back and wait to see how market is going to react. Because time and again it has faced resistance around the 18,000 level. So it's a market I'm continuously investing in. But I'm doing an SIP. So that's, I think, is the safe approach for retail to take at this point in time.
Right. So that's the way how retail investors can look to protect their wealth. But with that, let's kickstart with queries, isn't it, Adiraj?
Right. And you guys know how the queries work. This is your one-stop destination to all stock-related queries. Please write to us on Facebook, YouTube, and the number flashing on your screen. That's live. Let's start with the first question. Sharmila, this one's for you. Subrata Mukherjee is writing to us, wants to buy IRB, Infra and GAIL for long term. He's asking for your advice.
So where IRB is concerned, I think I'm a little more positive than GAIL. So I think IRB Infra, looking at the way their numbers have been and the way I see prospects for this company going ahead, as things return to normal and so on and so forth, and better orders going ahead, better execution going ahead, I would be positive on the stock and I will continue to hold. With GAIL, the problem is really everything that is happening globally with both gas prices, etc. So I'm neutral on the stock. But I think if I had it, I would hold it, but I wouldn't buy fresh.
IRB Infra, you also have Hemanta Datta who is saying that he already holds 50 shares at around 250 rupees per share. So what should his strategy be? Should he continue to hold, exit, add position, since you're positive on IRB Infra, but that was in comparison with GAIL, isn't it?
Yes, but I think he can continue to hold IRB Infra. I would have a target closer to 270, 280. And I think that if it goes below, say, like a 215, 210 sort of level, maybe he could look to add more.
I'll take this next one is coming from Nino, and Nino is saying that since anti-dumping tariff protection is no longer available, what would be the ideal strategy for long-term investors in Borosil Renewables? He wants to know, are you foreseeing any margin pressure for this particular counter, Sharmila? And what's the prospect if someone is already holding on to Borosil Renewables? Stay put with this one.
Yes, I think so. I mean, I don't think that it will go up in a hurry, but honestly, I know if you remember, these were the two stocks that you got after sort of Borosil separated into Borosil and Borosil Renewable, and they both had like a trajectory that was just upward in that whole phase. So I think to get to that kind of excitement, it could take time, but overall, as far as the industry goes, and how Borosil Renewable is placed in that, I would continue to hold the stock, and as a disclosure, I do hold the stock.
Right, Kunal, this one's for you. Anup is writing to us from Goa. He's holding 5,000 shares of Brightcom Group, bought at ₹65. He's asking whether he should average, hold or sell.
I would suggest to exit the stock.
Right. This one is coming from Hitanshu Shah, and he's holding Go Colors at 690 rupees per share. He's holding it since IPO. But he wants a technical view whether he should hold or sell. Kunal, do you have any visibility on this one? Because it's a recently listed counter, isn't it?
Yeah, I think, but it has a decent history. I think 12 months, 11-12 months of history for the stock price. It's a good enough chart. I think, the start of 2022 apparently was on a slightly skittish note for Go Colors. The stock corrected from 1250, 1275 to, at one point sub 900 levels. But then from there, the recovery is very strong, very stable. The stock has gradually moved back above that 1300, 1400 mark. I think if I'm not wrong, it's also managed to hit a fresh high for itself, just about that 1400 levels a week or two back. So again, that's a very slow and steady recovery for GoColors. So even though the chart history is limited, I won't be able to forecast for more of a longer term. But the recent trend pickup from sub 900 levels to now 1300 plus for GoColors seems to be very, very interesting, and it seems to be more of a durable trend which could last. So I would suggest to hold on.
Right. Coming to you again, Kunal Srinivas, writing from Hyderabad. He wants a fundamental advice on Natco Pharma. And the last quarter results were also good. But why is it going so negative right now is what he's asking.
So I think it's got to do with a lot of the concerns for the pharma sector overall. By itself, pharma stocks had a fantastic rally from the 2020 lows, but post that from 2021 mid somewhere is where when the pharma index start to top out, most of these pharma stocks, mid-cap pharma names like Natco Pharma, Aura Pharma, etc., these stocks have also corrected very, very sharply. Now, it's very difficult to try and gauge that where this correction would end for the stock because this is more of portfolio or structural selling which is happening into these names. Ideally, for you to buy the stock or average the stock, you have to wait out for a point where there is a breakout which comes back again. So, for example, if Natco Pharma crosses the levels of 650, that could be the first trigger of a breakout. And if that happens on strong volume day, then that's an ideal day to try and chip into the stock price. So you can just hold on to the stock as of now, but wait out for the point where there is a price volume breakout and the price is breaking specifically about the 650 levels.
Right. This next one that I have is coming in from Vimla George, and Sharmila, this is coming your way. She wants to know which one is the better stock to buy at current levels. Is it Electra Green or KPIT Tech, and the time period is about for a year or two?
Which were the stocks, KPIT and?
Electra Green.
No, unfortunately, I have never really looked at Electra Green, and KPIT, however, I do like. Only thing is that the PE levels seem a little high. I think wait to see the numbers and then take a call from there. The frontline IT companies seem to have delivered good numbers, barring I think Wipro. But I think Tata Elxsi was a disappointment. So these things can happen with mid-cap stocks. So I would wait to see the numbers. But unfortunately, I don't know the other stock. But this is a stock that I do know and like.
Right, Kunal, this one's for you. K. Venugopal Reddy has written specially for you. He's said, please take this to Mr. Kumar. He's bought Wipro 500 quantities at 680. What like to recommend to average? His investment time frame is 9 to 12 months.
So I think first of all you need to tweak your time frame to more than 9 months to 12 months, because I would not expect most of these large cap IT stocks to try and get their act back together like what we've seen in 2020-21, most part of the rally which had happened for these IT names. So I believe that they could now be in process of building a support or a good base for themselves, and that process would probably take another 3 to 6 months, and post that is where you would start to see some decent upside coming back for these IT names. Specifically for Wipro, since you've bought at an extremely high level, I think you should wait out for at least another quarter to come by. Let the stock consolidate over here for the next 2 to 3 months and then look to average. A much better averaging opportunity would actually be in HCL Tech or Infosys. I think those two are much better bet, at least as of now.
Okay, this one is coming in from Tansen, and he's writing to us from Kochi, and he wants a view on Tanla Platforms. He's already holding about 30 shares at a price of around 845 rupees per share. He also wants a view on Gland Pharma. He's holding 10 shares at a price of 2,375 rupees per share. Either Tanla Platforms or Gland Pharma. Your views, Sharmila?
So Tanla Platform I'm quite okay with. I think that the price that it's trading at, the numbers that it's done, they give me comfort. I think he can continue to hold that. With Gland Pharma, I'm afraid, honestly, a lot of things seem to have gone wrong for this stock. So, and then we are, in an environment where pharma is not doing particularly well. So, this one I think he should exit and maybe get into another pharma stock, a more preferred play, like maybe a Sun Pharma or something like that.
Kunal, this one's for you. Ahiram is writing to us. He's entered IEX at 230 with 100 shares. He's asking whether he should hold or exit.
I think you can hold on to the stock. It's coming very close towards the point which I've been highlighting time and again on IEX, that 125 zone for the stock. I think that's going to be a very strong support zone for IEX, at least on the longer term basis, and that could be a point where you can look to average, bring down your cost considerably for the stock. So you can suggest to, I'll suggest to hold on, but then 125 levels or just slightly around those points is where you should look to average.
All right, this next one that I have is coming in from Rajagopalan, and he's saying that textile stocks seem to be out of favor currently. So he wants to know, is it a good idea to buy them as a contrarian buy for the longer term, say for about 2 to 3 years? And if yes, and if you think the strategy makes sense, Sharmila, then if you could advise the best stocks in the textile portfolio that Rajagopalan can look at.
So, as we said, it is a sector which is out of favor, and in fact, it was just people were just beginning to recommend textile stocks, and then given with the way things have been globally and cotton prices, etc., then we suddenly had a bit of a sell-off in most of these stocks. If you had to buy, I think it might make more sense to buy something which is more sort of export focused. Then you get the benefit of, when things start looking better, then things can move faster for the stock. So I think Welspun is one name that comes to mind. So that's a stock that we could look at.
Right. But thank you so much. Stay with us as we slip into now a small break, but don't go anywhere. We continue with the query segment when we are back, and we also get you the whooping rapid fire round.
National Highway.
You've actually made money.
Catch India's most experienced market anchor, Nikunj Dalmia, only on ET Now.
The rupee depreciation is only helping further than the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long term perspective, I think we should still be fine even from here.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is that, नास्तिक है उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
Although difficult to predict, return will be more than 10 times.
Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
It's not always about buy, sell or profit loss.
After a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply. The Nifty Bank Index is down. Momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
It's the daily grind that gets me going. beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
In the market, right here in ET Now with
Start trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Overvaluation case.
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free.
When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
If the normalization in the world will happen, demand which in a sense got destroyed will automatically make a comeback.
When you believe in India's growth story,
Welcome back. You're watching Buy Now Sell Now on ET Now, and let's continue with taking your queries then. And the next query that I have with me is from Dheeraj, and Dheeraj wants to know about Tejas Networks. Kunal, he wants to know whether he should add some more to his portfolio, and also he wants to know about Tata Chemicals. Should he continue to wholesale or add? He's not told the buy price for either of his holdings. So what's your take on this one, Kunal? Either Tejas Network or Tata Chemicals?
See, I think you can hold both. Now your buy price is of course very, very essential over here. If it's at a slightly higher rate, then you need to look out for averaging strategy, and averaging could be done at current levels itself. But if you've bought at much lower levels, then you should wait for a decisive amount of correction for the stock price. For example, Tejas Network, if the stock happens to come back to say 620, 600 levels, that could be a classical point for you to look to average out. And for Tata Chemicals as well, I think a similar correction of at least 7% to 8% from current levels of 1150-60 could be a good point where you can look to average.
Right, Sharmila, coming to you now. Hariharan writing to us from Kerala, holding SBI Cards, 1,012 shares, purchased at 70 shares in June of 2021. He's asking whether he should average it more with the prospect of this stock.
Well, honestly, this is, I personally think that credit card as a business is dated. Of course, I think in the Indian context, you need to look at it a little differently. And SBI card is the only listed play in that, and they are trying to get a little innovative. But honestly, I would just hold what I have and not really further add to my position.
Right. The next one that I have is from Jai Krishnan, and he has Zomato at a price of around 67 rupees per share. He wants to hold it for the medium term, but he wants to know whether he should continue to hold on to it or exit from his positions in Zomato or look to average, and if average, at what levels? Kunal, your way.
Well, I would suggest to hold on to the stock. Now, what ideally you need to do is look out for levels of say 57, 58 or maybe just around the 60 odd mark as a good point to try and average out. The stock has given a big breakout on the longer term charts as well. It's managed to at least recover very sharply from those 40 odd levels, which was the major lows for Zomato. So the stock would now slowly and steadily get into a gradual recovery process. Of course, it's a long distance away from coming closer to its live highs or its post listing highs for itself. But I believe that the stock would get into a very slow, steady, gradual uptrend initially, and then once the pace picks up is where I believe that the real meaty uptrend could begin for Zomato. So ideally, you should look to hold on to the stock. Look at this as a multi-year kind of a holding period for the stock price, and sub 60 could be a good zone to try and accumulate from a short-term play.
Right. Again, coming to you, Sharmila, coming to you. Tex Maco is the stock, 200 shares at 54. Long-term investor. Leela Kumari writing to us from Vijayawada.
This is Tex Maco, right? Yeah. So, again, with rail stocks, I think, this the problem that happens here is that the kind of order wins that they have, and for them to translate into earnings, it takes a long time. So it's not that I'm like negative on the stock, but I'm not very positive either. I think at this point in time, you would be much better positioned if you were, say, in financials or some other sector like that. So perhaps you could hold what you have, but I definitely don't recommend averaging or buying fresh.
Right. This next one that I have is coming in from Jatin. And Jatin wants to know about energy sector like IOC, BPCL and HPCL, basically OMCs. What's your view on OMCs, Sharmila?
So once again, I think that with all that is happening globally with gas and oil prices as well as this windfall tax, etc. So, on the one hand, you may have crude correcting, but if you have windfall tax going up, so it sort of cancels out any gain they could be making there. So, very sensitive sort of sector. So there is no taking away from the fact that, replacement costs in the sector, etc. are very high and all that. But honestly, I think that if you don't have the stocks, don't buy them.
Right. Vinod is writing to us from Chennai. He's holding 100 shares of Varun Beverages. He's looking for a long-term perspective. What should he do? Buy, hold or sell? Sharmila, this is for you.
Yeah. So actually, I like Varun Beverages. I think, the kind of, so Varun Beverages is the company that bottles carbonated drinks for PepsiCo, carbonated and non-carbonated drinks. And, they have been increasing their network. They are trying to get into deeper rural areas, etc. Their growth trajectory so far has been quite good. And, with sort of full return to normalcy, you will see people going out, stepping out and consuming more of such items. So I'm quite positive on the stock. And I think that you can even buy it at this levels. Of course, as I recommended, do a sort of a SIP and try and buy on lower levels. But this is a stock that I like.
Okay, this next one that I have is coming in from Sagar, okay, and Sagar wants a combo view, and Sagar is getting too greedy. He wants view from both Sharmila as well as Kunal on his question on Deepak Fertilizers. He's saying he's holding 15,000 shares at a price of around 110 rupees per share. He wants to know, can it become a 4-digit stock? Also, I have personally visited the company and seen the turnaround story before buying the stock, Sharmila. And also he's saying that he was very bullish as the management was also pretty confident in their mindset and also vision was pretty clear to them. He's saying the stock has gone almost 9 times from his buy levels. But do you think there is some more steam left? Some more steam left, do you think so? Kunal, first I'll come to you on that one. And what's your view on the prospects for Deepak Fertilizers? I'll come to you next on that, Sharmila. What's your take on this one?
Yeah, I think the stock can, come back towards that 1,000-odd mark. I think 960 or 980, if I'm not wrong, was the previous major high for Deepak Fertilizer. It's a stock which has done reasonably well over the last 5 to 10 years. So yes, from current levels, looking at another 10% returns over the very short term is very much possible.
Right. Kunal, this one's for you.
Before you, Sharmila's view on Deepak Fertilizer.
My apologies.
So, I think he's bought at such a great price that it's really, I don't even understand his concern, and, he seems pretty confident. He's met the management. He knows the turnaround story. I honestly don't see any reason why we should be concerned about the stock. And I think 4 digits is a matter of time if they continue on the kind of trajectory that they are on. And there was a brief period when they sort of got into other businesses and, there were concerns. But now they seem to be over that and, the kind of specialty chemicals, fertilizers business that they're on, the kind of numbers that they're delivering. Things seem to be on track for them. So I think definitely continue to hold. I can understand his concerns and see he has slightly large holding. But for the moment, I'm pretty positive on the stock.
I'm sorry earlier for interrupting, but moving on. This one's especially for you, Kunal sir. Sandeep's writing from Tripura. He is asking, does the Credit Access Grameen have the pennant indicator as you taught us in BNS in Pathshala last Friday? And if so, what is the entry point?
Well, I would not say it's a classical kind of a pennant formation, but then on the long-term charts, and I'm looking at it specifically from a monthly time frame, and assuming that's the kind of a chart which you're looking out for, then yes, from the 2021 lows when the stock was at 500 towards the high the stock made of 1100, 1150, and now when the stock is consolidating, yes, that kind of a broad pattern is sort of a pennant formation, but then the consolidation is a bit less as compared to what an ideal pennant formation is, and even the testing of the highs and the lows is a bit less frequent than ideally what a pennant formation shows. So I believe in that regards you can look to buy or hold the stock. I think at maybe 885 levels could be a good support for the stock from a medium term play. I think if that level is tested, that could be a good point where you can look to buy, and the breakout level for this formation would be around 1050 to 1080 levels. So whenever the stock breaks past about this level is where I believe that the real breakout could come back again for the stock.
Okay, this next query that I have is coming in from, one second, let me just, I have a couple of actually queries pending still. This one is coming from Santi Cherela, and this one is on BPCL, 100 shares at 440 rupees per share. Is it good to average at current levels with a stop loss of around 275 rupees? Kunal, what's your sense on BPCL? No doubt we took a fundamental view on OMCs with Sharmila, but particularly BPCL.
No, I think I would suggest to switch out of the stock. No point into holding the stock just because the risk reward is in favor. The trends and the breakouts have to happen for the stocks to get into a reversal mode. This is more of a no movement kind of a stock price zone for BPCL. So it doesn't make sense to try and park more additional money into the stock. I think it's best to try and switch out from this sector as well as from the stock. A much better alternative which I would recommend from the banking names, something like maybe an ICICI Bank or an SBI could actually turn out to be a much better buys, much better zones to try and buy the stock even from current levels.
Right, this one's for you again, Kunal. Anand Tiwari is writing to us from Faridabad, asking for a 3 to 5 year view on Biocon and Wipro. Has 300 and 600 each, bought 3 to 4 days back.
See, Biocon, I'm frankly very surprised at why the stock has been a big underperformer. Even in the best of the pharma times in 2021 second half or 2021 as well, the stock has been a big underperformer. So I'm not so much sure why the stock has been underperforming. But then for me the breakout point for Biocon would be much above the current levels, and that would be almost at 330, 340 levels. So that should be at least another 20 to 25% upside from current zone is where the stock. The charts would start to look very attractive. Wipro, on the other hand, we discussed that my sense is that the stock should be a good buy and hold from a long-term play. You need to have a time horizon of at least 2 years, 2.5 years for this IT major to give you some substantial return. So if you have that kind of a time frame and appetite, then you should look to buy.
Okay, Supratim Pal wants to know about Graphite India for the next 2 years. What sort of a target can he look at for this one? By any chance, Sharmila, Graphite India?
Oh yes, so again, I think there is a spot of concern with everything that's happening globally for carbon electrodes, carbon black, etc. So I would be, I think looking at 2 years and all would also largely depend on how things pan out. So you need to keep a watch on this stock. I think continue to hold what you have, but definitely don't add fresh.
Right, and with that, we start the rapid fire round. Coming to you first, Kunal. Rahul is writing to us from Delhi. He's holding 20 shares of Hindalco. He's asking for a short-term perspective.
I would suggest to hold on to the stock at current levels of 390.
Okay, Joy Sheila Prema wants to know about Biocon. He already has a 300 rupees per share. He wants to know whether he should average it. He can hold on for the next 2 years. At what levels can he look to average, Sharmila?
I agree with Kunal. I really don't know why the stock has underperformed. I think the levels that he can look to average, to my mind, would be closer to 250.
Right. Kunal, another viewer we've got, this one's writing to us from Madurai. His name is, he's not written his name. He's asking for his view on IEX, your view on IEX.
So we discussed earlier how 125 is a zone where you should look to buy or average IEX.
All right, this next one is coming in from Shrikant. He wants to know about Federal Bank. He already has about 1,000 shares at current market price. Now, what should he do with this one, Kunal?
I think you should definitely look to hold on to the stock.
Right. Jayesh is writing from Nagpur. He's asking any intraday positions today. Any one of you can take this.
I'll take that. That will be for ICICI Bank at 880 levels. Looks attractive for 900.
Okay, KR Balan wants to know about KPR Mills, 1,000 shares at 550 rupees per share. Should he hold or switch to some other large cap? What's your take on this one, Sharmila?
Honestly, I don't
All right.
Right. My apologies. Tata Elxsi. Srinath is writing to us from Kochi. Kunal, so this is for you. He has 100 shares of Tata Power, 247. Should he book his losses now or hold to it? And what's the short-term outlook for the stock as well?
So I think with Tata Power, then I think you should definitely look to hold on to the stock.
Right.
Okay, Seema wants to know about Container Corp or Aegis Logistics. Which of this is a better counter that can look to invest? What's your take on this one, Sharmila?
I prefer Container Corp between the two.
Right. Slipping into a short break on that note. Stay with us. We'll be right back.
You will be known for your acumen.
For long-haul FII, who looks at India as still a promised land for a consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now.
Hello and welcome. You're watching Markets in Noon. Midway through the trading day, we help you catch all the trading action
and get the bigger picture of the equity markets.
We help you screen through all the clutter and get you research insights.
Master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch Markets at Noon every trading day only on ET Now.
Rakesh Jhunwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple of years ago.
I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी नहीं.
Once a trader, always a trader. Rakesh Jhunwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes. You don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember I want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
In individual sectors.
What's the sense that you're getting on volume growth? Just clarify this entire case. What is it going to mean for the business? What else are you looking at?
This is clearly one of the biggest deals.
Here, ET Now have been getting you bit by bit.